could you tell me a little bit about your startup, about the service and what you offer?
Sure. Clearspring has overarchingly the largest social sharing and targeting platform on the web.
Okay.
Our company reaches 1.2 billion unique users on a monthly basis. For publishers, we have a product called Add This. If you're familiar with Add This, Share This, and all of that. So it's a two-part value proposition. We have social plugins that enable users to share content from publisher sites. And then we also have social analytics that are real-time, that enable the publishers to optimize their content for social and sharing. And so we give that away. And in exchange, we can use that data in aggregate to fuel some of our other products. Our second side of our business is for brands and marketers. And the question is, how do you reach all of those audiences that we see through Add This? Add This is used by 12 million publishers and reaching those billion plus unique users. And so we have a unique processing capability where we actually map all of those users into what we call a multi-graph. So how are people connected, whether it's through the sites they visit or what they search or what they click. And we leverage that technology to help deliver audiences to these brands. I think we work with about 500 plus brands. So premium names like Sony, Disney, Ford. So it's been good.
Fabulous. And obviously you had to go for venture at some point, did you?
Yes, several times.
So tell me about that.
Which part do you want to tell? How many beers do we have? We've raised over $7 million.
Fabulous.
We'll let you know. So we've raised money from Novak Biddle, IVP, NEA, and a bunch of prominent angels. So we have folks like Ron Conway, Steve Case, Ted Leonsis, the co-founder of Capital One, Nigel Morris. So good group of people around the company. Great advisors.
Yeah, definitely. And so you're like on Series A or Series B?
No, D.
D.
No, we're all the way down.
You're winning.
I don't know. If raising money is winning, then yes, we're winning a lot.
Well, yes, because like easy business about winning the venture game, my business. So obviously you're one of the winners. Would you have any tips for entrepreneurs that are wanting to raise venture? Like, what have you learned? You've obviously learned a heap about pitching and raising capital.
Sure. I think it depends on the stage.
Okay.
So to early stage entrepreneurs, I think the key is, one of the major keys is to position against a wave that the venture community can understand.
Okay.
So for example, when you look over the years, there's always this classic, we're going to be the YouTube of X or the MySpace of Y. Trying to frame your business in the context of a trend where a venture person can understand the opportunity in the context of a larger market is important. I think oftentimes entrepreneurs forget a lot of these VCs maybe do 10 deals a year, and so they really need to pop. I would say the second piece of advice, early stage, is you want to make sure that they buy you. So in the Series A, the venture investor really doesn't know anything other than the team is really good and the market opportunity is great. Those are the two dimensions.
Okay.
Because the product and execution often change so much. this word pivot has become very huge in the Valley.
Yes.
So making sure that they really get to know you as a person, the team as a person, and believe that team is great. You're getting married for a couple of years, so I think people need to invest in that. So that's for the early stage.
And how would you suggest, what are good tips to basically be more authentic when you're interacting with a venture capitalist?
Tips to be authentic, that's interesting. I would say, so an example of what not to do might be helpful.
Right. Okay.
So I've seen people wear, for instance, dress up and wear suits to pitch venture capitalists, and they feel markedly uncomfortable because they're developers. I think what you have to do is sell the assets you have. So for example, if you're a 20-something out of school, then that can be an asset, right? A lot of folks try to overcompensate in the areas they're weak rather than double down on where they're strong. And so to show that, so when we were raising early on, our investors saw us in flip-flops and t-shirts. They knew we were engineers out of Carnegie Mellon, and we celebrated that and we told them what we didn't know and how we plan to fill in those gaps versus, hey, we have a business plan and the finance stuff down pat, which, you truthfully and honestly, you may not. So I think that's it.
you've got some great investors by the sounds of it, and obviously that means you've got some fabulous advisors. So did you consciously choose out these investors?
We try our best to. So
Okay.
we've focused at Clearspring. One of the most important things is people. So whether it be our investors, advisors, our board. A lot of our board members serve on publicly traded boards. So
Okay.
Ted Leonsis, for example, serves on the board of Groupon, Amex, Rosetta Stone.
Great.
And so we've tried to surround ourselves with people that will stretch us and challenge us. And we do the same thing on our team. So we have great people from companies like Google, AOL, Yahoo, people who've led in their functions and really are hungry. So I think just universally, the same advice that I give to entrepreneurs about early stage when they're trying to pitch investors, it boils down to team. You really have to be careful about that.
Great. Wow, that's really wonderful advice. I certainly feel educated. Thank you so much again for your time. It's really been interesting talking to you.
Thanks.